Love finances the other F word and want to support the show? Become a patron by going to patreon.com/FTOFW. You'll get special features, a shout out on the air, and early releases. Or if you prefer, pick up some merchandise at financestheotherfword.com.
As fantastic a CFP as Mel O is, as wonderful an attorney as I am, and as good as Stormy is at whatever it is he does, please do note that anything said in our podcasts are our opinions alone and are not meant to be taken as financial or legal advice.
Welcome to Finances, the Other F Word, a Gen Xer podcast for musicians and music lovers, where we discuss money and music without all the pretentious bullshit. Here are your hosts, Zoe Terry, attorney at large, Stormy Andrews, founder of Yokel Local Marketing, and Mel O, certified financial planner and author of Finances, the Other F Word. Listener discretion is advised.
Hey guys, welcome to Finances the Other F Word. And I'm kind of laughing here because for our patrons, you just heard about 12 minutes of two very interesting stories that has happened to Mel within the last week. And one of them was pretty interesting, and it revolved around Clubhouse and race and, you know, things that we have talked about on this podcast before, but it acted out in real time at really a fucking junior high level, which was kind of fucking insane. And so I'm smiling, if you can hear it in my voice, because it was just fucking crazy. I mean, it took me a couple days to recover from it, but now when I look back, I'm just like, oh, shut the fuck up. What is wrong with people? So we are sans Zoe today because she is down on the strip with her youngest doing a staycation, but she is going to be joining me later tonight for a Clubhouse pub trivia show, which is on Clubhouse at 7:00 on Thursdays, Pacific time. We give away real prizes, we drink adult beverages, and we talk a lot of adult shit. So the episode today was going to be on the economics of the Constitution, which is stimulating.
Stimulating. I'm stimulated right now.
Stimulated. You're probably going to get a chubby from it.
I got one.
Yeah, I know. Your constant state of chubbiness. It's the pills. There's every morning pills. You take your vitamins, you pop your pill. You want to be ready, man.
I want to be ready. You just never know.
Dude, I get it. I get it. I'm fucking here for it. So when I started researching the economics of the Constitution, because what I was trying to do is that a lot of times politicians throw shit around and they say XYZ from the Constitution. And to be honest, most Americans, we don't fucking know what's in our Constitution. And so I thought, hey, it would be so interesting to dig into the economics of the Constitution. Well, the Constitution doesn't really say shit about monetary policy at all. So it kind of morphed into economics of the Constitution and what the Fed does. So let's just talk really quickly about what the Constitution does say in regards to money. They give...
Does it say money, money, money? Money. Was that from the Constitution?
No, it doesn't. That's from the OJs. But
oh, my bad. I'm sorry.
Yeah.
I thought it was the Constitution.
People got to have it. That's my fucking jam right there. But especially the beat is boom, 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 boom. Yeah, that's like
absolutely
fucking great song.
Jam.
Great song it is, totally. Plus it sings about money. I mean, come on, who doesn't love it? They don't. Oh no, Me and Mrs. Jones. Who is that?
Me and Mrs. Jones. Mrs. Jones.
That's
Mrs.
not
Jones.
the OJs.
That isn't? Was that the Commodores? No, that was the.
Is it the Shy Lights? Who sings that? Okay,
no,
you gotta Google it for me.
Check it out.
Yeah, so because by the time you're done Googling it, I'll be done with what the Constitution says the government can do in regards to money. It says they can implement taxes and collect them. They can coin money. They can set the value of money. They can regulate interstate commerce, which we talked about on our Economics of the Supreme Court episode. And they recognize people's right to own property. And it says that citizens can enter into contracts. And that is about it.
Interesting.
Yeah. So who does Me and Mrs.
It says Billy Paul.
Who the fuck is Billy Paul?
I have no idea. Billy Paul, man, Mrs. Jones. It says Billy Paul. I need to look that up on Spotify because I'm gonna double check that because I've never heard of Billy Paul and you've never heard of Billy Paul, so that's a problem.
No.
Let me see, Mrs. Jones. I'm getting there. Oh, come on, dismiss. Mrs. Jones.
I think it's me and
Mrs. Jones.
Yeah.
Billy Paul.
Oh, all right, Billy Paul. We're sorry that we didn't know who you were, bro. Don't play it because remember we can't play it. We don't have the license.
That's right.
We got in trouble by YouTube for playing the OJ for Orange Juice Joan walking in the rain. We got a little nasty gram from them because we weren't allowed to do it. So don't get us in trouble, Stormy.
Okay, got it.
All right. So let's talk about real quickly about what the Fed Reserve does. And we've talked about the Fed Reserve on this podcast a number of times, but we haven't really went detailed into the structure of it. And it's the closest I can get to the economics of the Constitution. Now, we're going to touch on margin here in a little bit. And next week, we're going to go into a full detailed explanation of how margin works, because there's been a lot of companies in the news that have been affected by margins. And it is becoming more and more prevalent. It's very important that you guys understand what margins do and don't do, and the liability associated with margins when you bet the wrong way. Because literally it's a bet. So federal.
And there's been some people getting crushed on those bets as of lately. I remember you did an episode not that long ago where you were warning, where you kind of brought up the consequences because of a lot of the TikTok financial advisors were telling people, "Oh, go do some margins," and you kind of lit into it.
Yes, and I do a lot of that on TikTok. But because there's a lot of bad advice that we typically see at times like this, and that's all we'll talk about because I am not allowed to talk about the market per C blockers.
Okay, gotcha.
Yep. So don't get me in trouble, Stormy.
Can I talk about my doctors that I listen to on TikTok? That's where I get all my medical advice.
If you'd like to. Do they talk about your ginormous balls?
I mean, I have to send them some messaging and say, "Can you guys start talking about that?"
Right. I would just send them a picture and just cut straight to the chase.
Just cut straight to it. Okay.
Be like, is this natural?
I'm going to work on that. Okay.
Yeah, when I hold my own balls, my hands get tired.
Yeah.
Yeah. So I, just want to know, you just say it's to support my massive dick. And then you fucking do that. All right. Here, hold on. All right, let me make sure. Okay. I don't know if bam, like that with the X. Sometimes I'm like, it would be cool to have a penis for like 5 seconds so I can just get pissed at somebody and just be like, suck it. But I have a vagina, so it's not quite the same. I guess I could go eat it, but then it doesn't sound as like suck it. You know what I mean? It doesn't sound as powerful for some reason.
Yeah.
I really hope under 18-year-olds are not listening to this. But it is what it is. So, okay, back on the Federal Reserve. I don't know how we got there. Let's bring it on back. So Federal Reserve is independent. It reports to Congress, and it does not rely on Congress for any type of funding. It earns money from transactions that it does. So one of the transactions that the Fed does is it receives foreign currency in and exchanges that currency for dollars, because most of the world trade is conducted in the US dollars, and it charges a fee for that. That's one of the main places they get their money. The president, with the approval of the Senate, appoints a Fed chair like every 2 years. And so what happens is if you have a Fed chair that's in there and 2 years they come back up, they either get renominated and approved by the Senate or somebody else gets elected. The Fed is not allowed to have any offices based out of the United States. And its main job is to keep the dollar stable and maximize employment using monetary policy. And so the administration that's in the office controls fiscal policy, which is our taxes. Monetary policy is controlled by the Fed. So the reason why this is important is because there's a big concern over inflation right now. And Powell has come out and he has said publicly, so I'm not telling you anything that's not public knowledge. He's came out and said publicly that he has no intentions of raising interest rates to cut off inflation until everybody is back to maximum employment. I have my own theory of why he's really not raising it. But that's what he is saying. And so the Fed is comprised of 3 sections. The first one is the Board of Governors, which sounds so fucking old, 13 colonies, but it has 7 members that are the direct, the monetary policy, and they set the discount rate. And so we've talked about the discount rate before on this podcast, and that is the interest rate that they charge to commercial banks and other financial institutions who borrow money from the Federal Reserve. And they also set the reserve requirements for member banks, which we've also discussed, which is where to have FDIC insurance, I also talk about this in my book, to have FDIC insurance every single night, you have to have a certain reserve requirement on deposit with the Fed. And that changes because they change it if they're trying to control the money supply. And so that is the way that they set it. And they say, hey, you need to have this percentage of deposits on deposit with us overnight. And what you'll see a lot of times, or what you used to see, and I'll explain why that doesn't look like that anymore, that banks lend money to each other on overnight deposits, and they charge little tiny nominal fees. There's no collateral. And they just basically say, hey, we trust that you're going to pay us, et cetera, et cetera. So on the board of governors, there's economists that are on staff that do all of the analysis, and they provide all of the information to the board of governors for review. Then there are 12 regional Federal Reserve banks, and the board supervises them. And these banks help implement policy, and they're based in Boston, New York, Philadelphia, Cleveland, Richmond, Atlanta, Chicago, St. Louis, Minneapolis, Kansas City, Dallas, and San Francisco. I don't know why Vegas doesn't have one.
We're Vegas.
Yeah, but I mean, wouldn't that be fucking awesome to have like
we should have one.
Yeah.
We need to talk to them.
Mm-hmm. Dude, let's start a letter writing campaign.
Mm-hmm.
I'm going to try to get them banned so that they move one of those ones to Vegas.
Yes.
What do you think of that?
Absolutely.
I think they might be racist. And so the third division of the federal of the Fed is the federal. Did I go over the line?
No, that was good. I like it.
Okay, thank you. I appreciate that. High five to me. Federal Open Market Committee, or the FOMC, and they basically oversee the open market operations. So the Board of Governors, the president of the Federal Reserve Bank, which at this time is Powell, and the Federal Reserve Bank of New York, plus 4 of the remaining 11 regional banks comprise its members, and they meet 8 times a year, and the board members serve non-adjacent terms for 14 years each. So basically, they rotate out, so different regions come in and go from there. So the Fed chair stays for a 4-year term and needs to be renominated to keep their job. And a new Fed chair is appointed every 2 years by the president. And this is what they do. So we've talked a little bit about what they do, but let's really get into understanding what they do, because there's been a huge spotlight on the Fed lately with the concern of raising inflation rates, the fact that we've had interest rates down for a very long time with the pandemic, et cetera, et cetera. There's a heightened awareness of the Fed. They're really on display. So their first job is to manage inflation. So a lot of people use the gauge of the CPI, which is the Consumer Price Index, which we've talked about in this podcast before, which is a basket of goods and services that are monitored to keep track of inflation. Well, the Fed doesn't use that one. They use the Personal Consumption Expenditures Price Index, or the PCE, which does very similar to what the CPI does, but it takes out the inflation of food and gasoline prices, which is confusing to me, because if you're setting monetary policy for the entire United States and you're taking out 2 of the biggest things that most everyone needs to be able to function in the American society, that just seems kind of, I don't know, counterintuitive.
Yeah, but could it be because, gas pricing, that's a commodity, and the way that can fluctuate, it can fluctuate so great. It's not that stable of an item to have as part of that policy. And I would imagine food the same way. Certain areas of food, it could get a little squirrely, couldn't it? Just because of the fact that it's the lack of stability in gasoline pricing.
Well, and I agree with that. I understand as far as like more reliable and less volatile, that would be a good one to do. The deal is, though, is if you think in 2008, we had interest rates dropping like a rock, and we had gasoline just shooting off the fucking charts. And so what was happening is that people were those who still were employed, they were going to the gas pump, and it was much like kind of how it is now. I mean, it was like high $3, low $4 to fill in 2008. It was just another clusterfuck of 2008.
How much is gas now? Is it like $3?
Yeah, by me, it's like I want to say it's $3.96 or $3.86 for premium.
Like $4 a gallon?
Mm-hmm.
That's how much gas sells for?
Yeah, is that not? I'm sorry. Why don't you know what the price of gasoline is, Stormy?
I haven't been to a gas station in a long time.
Mm. And why is that?
Well, that's because I drive an electric car.
Oh, do you? Okay.
Yes, I do.
So are you trying to say you're better than me?
Yeah, I've said that many a times, but no one listens.
Are you racist against me because I'm white?
Yes, absolutely.
And I don't have an electric car? Okay.
Yes.
All right. Fair. You know what? Fair enough. Fair enough.
Statement. There it is.
Yep. There you go.
Is.
So, in addition to this, the Fed also sets the Fed funds rate and also the amount that's sets the Fed funds rate for the funds that are held in the bank's Federal Reserve accounts. And so what used to happen is that, like, let's say, you know, there was a reserve requirement that was set for a bank and they ended up having more money set in the reserve account. And then they would take that excess money, they would lend it to other banks that were short overnight to meet their FDIC requirements with the Fed and charge them a little small fee. And there you go. Okay. But what ended up happening now is that, and I think it's in 2015, and I'll get to the date in a minute, is that the Fed has come in and said, we're going to pay you to the banks. We're going to pay you interest for the extra money that is above and beyond the reserve amount that we require. And so now what's happening is that banks really aren't lending to each other anymore, which gives me a little pause because, you know, it's a supply and demand thing. So if there's banks out there that have a bulk of money and they have over their Fed requirement, and the other banks, for whatever reason, due to a variety of reasons, maybe not would have had the money, and they would have been expecting other banks to kind of fill it in for them, but then those banks don't do it, then in my head, how is that not giving the largest banks an advantage over the smaller banks? Because if you have a smaller bank that can't meet the requirement, and the system was set up for banks to exchange cash to be able to meet these requirements. I mean, I don't know if I'm going completely off kilter, but when I read that, I was like, ooh, that doesn't seem right to me.
Right.
So anyways, but when they do, the loans are typically overnight and they're collateral free. And when each bank lends to each other, they just trust the other bank that they're going to do it. And like I said, they pay a small fee based on the Fed fund rate. And that's one of the ways that the Fed supplies, controls the supply of money. So in March 15th of 2020, the Fed, just last year, the Fed reduced the reserve requirement for FDIC insurance to zero to encourage banks to lend out more funds during the pandemic. We saw a lot of this during the 2008. I've talked about the 2008 and what happened with it. I'm not going to rehash it. But that was another thing that came up in the room, by the way. I just
2008?
Yeah, that we caused 2008. And I'm like, the people, the advisors in the room caused 2008. And I'm like, I think you have a gross misunderstanding of what happened in 2008.
Right.
Yeah. Cause could you fucking imagine, like, if I just by myself could collapse the entire economy, that'd be crazy. Right. But you know who did? Rockefeller, and we talked about it in the Men Who Built America episode. He pushed us into our very first recession. Yep. Go back and listen to it. That series is fucking amazing. I'm going to keep going back to it because history keeps repeating itself and so on. And so what happens is that in March 15th, 2020, they made it to zero. And in 2013, the Fed started to do reverse repos, which is where the Fed, now listen to this shit and listen to this circular crap. Now, and we also touched on this in the Social Security episode, if you go back, because how Social Security is funded, it's funded with treasuries, but the treasuries are issued by the government. It's this circular house of cards with Social Security. Well, here we see it in action again. So in 2013, the Fed started to do reverse repos, which is where the Fed is now borrowing money from the banking systems overnight, and they're collateralizing their loans with treasuries that they issue themselves that are backed by their own taxing power of authority.
Run that by me. So let's say that was the two of us.
Yep. So basically, you're a bank.
Okay. Let's just make it two people.
Okay.
So you're gonna loan me money overnight so my checks don't bounce.
Yeah, but you're the Fed.
Yeah, but
You're
I
the
just want to
Fed.
put it in like real world
I
terms.
know, but
Is that
but
too
you
hard?
can't issue, yeah, because you can't issue treasuries. So let's do it this way. So you're the bank, Stormy.
I'm the bank.
I'm the federal government, and I say,
You
hey,
print the
Stormy,
money.
I print the money
Okay,
and
you
I
print the
issue
money.
treasuries, and I back the treasuries that I issue with my taxing authority. And I go to you, the bank, and go, hey, can I borrow some money overnight? And you go, sure, Fed, I'm going to give you some money. Here you go, Mel, I'm going to give you some money. And I go, thank
Okay.
you, Stormy. I'm going to give you these treasuries as collateral that I've issued, that I also back with my taxing authority. And that's the collateral for the loan that I just borrowed from you. Now, granted, these are ultra short-term loans, but do you see where you get caught in this weird like circular thing?
Yeah, it's kind of interesting. So let's say if I went to tell me if this works, okay? Tell me if this
Okay.
works.
All right.
So my buddy's Elon Musk.
Okay.
Hey, Elon. And he comes to me. He wants to borrow money from me, which is kind of cool, right?
Right. That is cool.
He wants to borrow money from me, so I loan him a few bucks. And he says, Stormy, for collateral, I'm going to let you hold on to a couple of Teslas.
Tesla stock would be more appropriate to make the analogy work.
To make the analogy work. So he's going to give me some Tesla stock to hold on to make sure I get my money back.
Correct.
Oh, yeah. Okay. But the fact that he's coming to me is kind of strange, right?
Because he's Elon Musk.
He's Elon Musk. And then he's giving me some pretty good collateral with it. I must be a pretty cool person to borrow money from.
Well, but the main thing, that the important part here, is that the collateral he's giving you, he ultimately has a large control over. But in the example of the Fed government, they have ultimate control.
Control, right? Yeah. I was just looking for something for a common folk like me can understand.
Yep. Well, you did a great bang
Elon,
up job.
if you're listening to this episode, you let me know if you need a 20, 40, maybe even $100. I got you.
Yep. Stormy is your guy. And so what I find very concerning about this is the fact that the Fed is now borrowing money from the banking system. And you know what the fuck I'm going to say in the Men Who Built America episode, that's exactly what happened with JP Morgan Chase. There was, and I can't remember where in the timeline it was, but if you go back and listen to that 4 or 5 part series, it's well worth your time, or watch the documentary series on A&E. The government had a shortage in their treasury. And so he had so much motherfucking money that he came in and he bailed out the US government. And then, of course, many years later, he got a lot of government contracts for his various companies because, he had the steel and US Steel and all this kind of stuff. So almost everything we talk about, you guys, comes back to the same fucking shit over and over and over again. It's fucking crazy. So you have to be really cognizant about the shit that's happening, because I didn't hear about this. And to be quite honest with you, even if I had heard about it, I wouldn't have even got it. I would have been like, okay, whatever. I'm not an economist. I don't fucking get this shit. But when I researched it, I was like, And as always, I will put all the resources in the notes. I don't use information from every article, but every article I read.
What do you got against economists?
I don't.
Oh,
I'm not
racist.
An economist.
You're racist.
Oh, shit. It's okay. I'm sorry. You're right. So white man's burden. I apologize. I did not mean to be racist against
all you economists out there. She apologizes.
Yes, I'm sorry if any economists were offended by my thing. But no, I'm not an economist, but I wish I was. Because they would hear stuff like this and like alarm bells would go off. But this was in 2013, it's 2021. And then I read it and I'm like, that doesn't really sound right. So going on further. So one of the things they do is they stabilize interest rates. We've talked about that above. And then they supervise their largest banks, and they supervise the largest banks, which they happen to be borrowing money from for overnight. You see what I'm saying? Like this whole fucking thing just like loops and loops and loops. So one of the ways that they supervise the largest banks is with margin parameters. And so in November 12th of 2015, the Fed created requirements to set margin limits. Now, margin in the industry is a $4.4 trillion business. We are going to talk about margins on the next podcast. Let me explain this. A long margin position is where you borrow cash from your broker dealer. A short margin position is where you borrow stocks. A long margin position, you want the stock, underlying stock, to go up. And a short margin position, you want the underlying stock to go down. And I'm going to explain all of that next week. I'm not getting into that shit right now. And to have margin accounts, there's requirements that you have to. There's Reg T requirements, and then you have to, put in 50% of whatever it is you're borrowing. So if you're borrowing $10,000, or 10,000 worth of stock, you got to put in 5,000, et cetera, et cetera. And then what happens is that then you have, margin calls where if it gets below a certain amount, then it gets in like a restricted status. And then if it gets below 25, it's a margin call. We'll talk all about that next week. It's very amazing, but you guys will have a good understanding of how margin really works and how it can kind of backfire against people. And so we'll cover that next week. And so the Fed was granted this power in 1934 under the Securities Exchange Act, but they just started kind of flexing their muscles with it in 2015. And all of the margins and derivatives came to light during Reagan's presidency. So since Reagan gave kind of the thumbs up on these derivatives, we've had derivatives in the market ever since. So good times. The Fed also provides financial services to the U.S. government, and they try to keep the financial system stabilized. Stormy's over here yawning his ass off. Now he's making me yawn. This is exciting stuff, Stormy.
I like it. I'm digging this.
And you know what? Now that you yawned and I yawned, I guarantee you at least 100 listeners just yawned.
Just like, yeah, absolutely.
Yep. You're welcome for that. Yeah. So they try to keep the financial system stabilized. And so an example of that is the recent PPP loans and other small business loans that have happened that have been issued, and the government has purchased them. And we talked about this in 2008. I'm not going to go into it again. And so now let's kind of talk about how they get the information, and then we'll be wrapping this up because I know this is so fucking stimulating. So one of the reports that people may or may not have heard about is the Federal Reserve Beige Book. And actually, I think the real name is like the something of consumer something, like the Beige Book is actually way more exciting than the actual title of it. But the reason why it's called the Beige Book is because why, Stormy?
Because it's beige.
Yep. Because the folder is beige. Correct. So good job. You're fucking amazing.
I've researched it.
Yes, I know. You did a great job. So the Federal Reserve uses the Beige Book, and the Beige Book is also a leading market indicator, which we've already talked about in this podcast, leading versus lagging. So go back and listen to it. So the 12 Federal Reserve banks collect a whole bunch of information from branch directors, business lenders, and economists, and they want to know how they're being affected by global and national trends. So one of the things that just recently happened that I'm sure is going to show up in their Beige Book is what happened in the Suez Canal. So the Ever Given.
It's called the Evergreen or Ever Given?
No, it's Ever Given.
Ever Given, okay.
Yeah, double check me, but I would be willing to take a shot.
We'll roll with Ever Given.
Yeah, I did a money news on it. It's Ever Given.
Ever Given.
So yeah. So anyway, it blocked the Suez Canal for how long was it? 4 days, 5 days?
I mean, it was a little bit of time.
Yeah. How did they finally get it? I know that they got it loose, but how did they get it loose? Because tugboats couldn't get it loose.
But there was tugboats and they were digging some dirt around it. I don't know, but they got it loose.
Yeah.
Well, some of the captains started going around the long way because they thought it was never going to get loose, but they kind of made the wrong choice.
Dude, I was thinking that they were going to have to unload the fucking thing and just blow it up and sink it.
Yeah. Did you see how many containers are on that ship? It's incredible, isn't it?
It was as long as the Empire State Building.
And just full of truck containers. It was crazy.
Yeah, it's I've never been close to any of those ships, and growing up in Washington, Puget Sound has really deep harbors, and so there'd be a ton of ships going in and out of there, but I've never seen a ship that fucking big. And I mean, and the thing that's so crazy is that it got blown over there. Like Mother Nature, she is a fucking bitch. Like, I don't care if you build a ship as big as the Empire State Building, motherfucker, you're going in the dirt. Bam. Right. Oh my God. I wonder if that guy's going to have a job.
Yeah.
Because if he didn't do anything wrong and the wind blew him, but I'm sure his reputation is still.
Man, he's getting fired for getting blown.
Oh, You know,
That was
didn't happen
pretty
to
good,
Clinton.
huh?
Didn't happen to Clinton.
Exactly.
Yeah, I mean, technically, I guess he got impeached, but, you know, didn't get removed from office like some other presidents. So in the Beige Book, what they do is they monitor the 12 regional banks who gather information about global and national trends, and they monitor business activity. They monitor hiring, like how easy it is to hire, and if they can find people out there for work. They also garner information on local issues that affect businesses like port closures, which is why I just mentioned the Suez Canal, strikes, weather, exchange rates. So this would be in between currencies, the price of oil, and inflation. And the Beige Book tells the Fed which industries are growing or shrinking. And so they can kind of have an eye on that. And I don't know necessarily, I mean, I'm really trying to think how that in itself would be helpful, unless they're thinking, okay, you know, people don't do XYZ anymore because now machines do it. So maybe we need to retrain those people. Like, since I'm not an economist, I'm not really sure why that would be relevant unless that industry has loans out. And if those industries are shrinking, I want to make sure I'm getting my fucking money back. Right. I mean, I don't know. I'm trying to speculate as a non-economist.
Yeah, no comment.
Okay.
I know you wanted something from me, and I can speculate with the best of the speculators out there, but you kind of went over my head.
Okay. All right. So yeah, and I don't know the answer to that either. I'm just reporting the information for your listening pleasure and or viewing pleasure if you're watching on YouTube. And so all of this information is presented to the Federal Open Market Committee 2 weeks before they meet, and they meet 8 times a year. And then basically all of these things help the Fed decide which course of action they're going to take, whether to expand or contract the economy.
Voila.
There you go. There you go. So all of those things are what make up what the Fed does and what their driving purpose is. So speaking of Clinton, it depends on what your definition of is. Do you remember that? When they were asking if he had lied.
Has he lied? Yeah.
He's like, yeah, depends on what the definition of is. Yeah. So anyway, so that concludes our round.
So what is the Fed?
The Fed is all those things. You want me to start over?
We can just start the whole podcast over from the beginning.
Dude, let's keep doing it. Yeah. And I'm going to put on an adult diaper and just keep, I'll sit here and I'll pee while we're talking. So I never have to leave this place. And I'm noticing today, I have a different color eyeshadow on.
It looks good.
I know, right?
Like I do that.
You should do that. I think it would match your skin complexion very well. Like, I'm seriously, like, as I catch little lights, I'm like, hey, what's going on? Mel?
Check that out.
How you doing? When I think about me, I touch myself. So anyway, anything to add to any of that, Stormy?
That was good.
Thank you for the positive reinforcement. That's fucking amazing. I love it.
Yeah, you know what? I'm surprised you got through this episode only being racist towards economists, and I was shocked. I thought you'd be racist towards more things than economists.
Yeah, well, I tried to keep it in check. So thank you. I'm working on myself right now.
Okay, good. Work on yourself.
Yeah, exactly. So with that, make sure you follow Lily Lou Mittens on Instagram, buy Stormy's book, World's Best Buyer Persona System, Finance is the Other F Word, Another F Word to Love. You can pick up our book. We have a clubhouse at 7:00 on Thursdays where we do pub trivia. We give out good prizes. We record, well, actually, we don't give out good prizes. Let me back that up. We give out real prizes. We don't give out good prizes.
Good prizes. Real prizes. Yeah, they're
real
not
prizes.
Good.
Totally
They're
different.
real.
Yeah, they're real prizes, not real good prizes, right? But it's fun as fuck. Nothing that you want to listen to with kids in the car. If you think this podcast is bad, pub trivia is like much worse. And then you can always rate, review us, and subscribe wherever you get your podcast. I will be back with my beauteous eyeshadow, which I'm really like digging my eyeshadow right now. Stormy will be coming on with his eyeshadow next time.
Absolutely. I'm going to get my eyeshadow going.
Yeah, so we can compare. And with that, we are out this bitch.
Peace.
So do you think that was funny?
Yeah.
Thank you for listening. If you like the show, please rate and review us and tell your friends.